Welcome to Bloomberg ETF IQ Europe. I'm Dani Burger. Over the next 30 minutes, we'll be your guide to the region's thriving market in exchange-traded funds. Everything you need to know about the funds and the flows. $460 billion of inflows. We'll ask if the U.S. ETF market's bumper growth will continue, regardless of whether there's a Democrat or Republican in the White House next year. The next big thing, 95% of institutional investors say the fixed income market is ready for the quant treatment. We'll discuss a new way to buy bonds. And if you're sick of the presidential race, how about taking a gamble on the growth of sports betting? We'll look at some of the new thematic ETFs vying for your money. Welcome to ETF IQ, everyone. First, let's take a look at which countries and sectors have been attracting the most money. Sebastian Solik has the details with FFLO Go. Good morning, Seb.
Hi, Dani. Do you know what? It's been a pretty good month for European ETFs, more than $1 billion of inflows. Let me run you through exactly where that's coming. We start in the UK, which takes the lion's share, about $700 million worth. This is a Brexit play, isn't it? We've seen a lot happen in the Brexit story over the last month, not least weighing on sterling. How do you trade the sterling in equities? You buy exporters, and that's what we're seeing ETF traders do. And that's really what is taking the majority of this. Switzerland will just gloss over. You get those quirks, don't you, with UBS money moving inside, showing up here, which takes us to Italy. Italy, if we talked about it a few years or a few months ago, then we would have had a very difficult time. You had political risk, didn't you? You had economic risk as well. All of that has gone away. It's not the world's worst performer in terms of virus handling anymore. In fact, in European terms, looking pretty good, which takes us to the downside. Speaking about handling the virus, Germany not looking so good at the moment. We're at record highs in terms of numbers, in terms of daily cases. So we're seeing money coming out in terms of ETFs, $175 million worth this past month, Dani.
Wow, more than $1 billion worth of inflows. That's a lot. Thanks, Sebastian Solik. Now, joining us to discuss those flows this morning is Howie Lee, head of ETFs at Legal & General Investment Management. Howie, first off, thanks so much for joining us. Now, one of the things that really stuck out in what Seb just showed us was this continued inflows into European tracking ETFs despite the coronavirus concerns. What is behind these unrelenting flows we're seeing?
Yeah, thanks, Dani, and good morning. What we're seeing is a continued growth in the ETF market. Now, bearing in mind, ETFs are made up of equities, fixed income, and other types of investments. And certainly in the first half of the year, we continue to see flows into fixed income. Last year, about $40 billion worth of European flows was into fixed income. This year, that continued about $30 billion right up until September. I think around September, we started to see risk gone back into the market where equities absolutely picked up. But there's certainly some trends to be seen here because, out of these flows that we're seeing, 50% of the European net new assets are actually coming from ESG-related ETFs. And certainly that is a new record. And even on the launches that we see, 12 of the 20 new launches are indeed, of the largest ones are indeed ESG-related.
Howie, that's pretty remarkable because I feel like a lot of times when you get crises, financial crises, or in this case, a health crisis as well, sometimes ESG kind of gets thrown to the side. Why is this year the year for ESG strategies, especially here in Europe?
Yeah, do you know what? I think it's really because of how investors are, one, being asked by clients to really consider the environmental, social, and governance. All under the umbrella of responsible investing. So I think that's one driver. There's also a regulatory driver that are essentially asking for asset owners to think and invest responsibly. So when you have this dual kind of pressure between regulations as well as investors wanting to move their investments into ESG-related investments, that is really going to make a difference. All of a sudden, we're not just talking about asset allocation movements here. We're talking about asset allocation movements for multi-asset investors, as well as reallocations from, let's say, non-ESG building blocks to new building blocks.
Well, with those ESG investments, surely, as you say, regulation is a big mover here, but I'm wondering how the things are actually constructed. For example, this year, one industry group, the Investment Association, said that a third of FTSE 100 companies weren't reporting gender statistics. How do you even build an ESG ETF if there are these sorts of gaps in data?
Yeah, it's a great question. I think where we are at the moment is that ETFs and actually the investment community needs better data. Now, ESG data is improving, every single year, every single month, and really there's a bit of a race to really get the ESG data complete. Now, we're probably going to reach that within the next kind of couple of years. But as we get more and more data, that gives investment managers like ourselves more information to be able to build and construct investment strategies with precision as to exactly what we want the outcome for that ESG to be. But we also shouldn't forget the importance of an asset manager's role in, when managing these investments, also to be actively engaging with these companies to essentially encourage better behavior from companies. So I think that's why investment stewardship is extremely important.
Both the human and the data angle, they're important for ESG. Howie Lee from Legal and General Investment Management stays with us. Now, coming up, with nearly $17 trillion of global debt already yielding below zero, what's left in fixed income? 95% of big investors reckon quant strategies could be the next big thing. We'll bring you that story next. This is Bloomberg. This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Dani Burger. Now, let's talk fixed income and a new hunting ground for quants. With nearly $17 trillion of global debt already yielding below zero, investors are keen on new products for their money. According to Invesco's annual survey, 95% of institutional investors now say they think factor investing can be applied to the world of fixed income. Let's get more details with Sam Potter, who runs our ETF coverage from Bloomberg News. Sam, good morning. Look, factors are already really popular in the equity world. Tell us why this matters in terms of fixed income for the world of ETFs.
Good morning, Dani. Well, it matters for two key reasons. The first is how these large institutions, these big investors, choose to get their exposure. The second is the scale that we're talking about here. So also in this survey, we saw that there is a growing use of ETFs for these investors to deploy in fixed income and deploy factors as well. Most institutions now use factor ETFs, it found, and it said that 14% of their factor portfolios are in ETFs. For wholesale investors, it's more like 50% of their portfolios in ETFs. Now, in terms of scale, this is a survey of investors, of institutions with more than $25 trillion in play. So, as you can imagine, any growth there, any increase in allocations towards factor strategies in bonds is likely to find some of it at least, is going to find its way into ETFs, and that could lead to more of a boom into the smart beta fixed income funds.
Well, speaking of a boom in ETFs, the boom in bond ETFs in general, Sam, it seems to have gotten a lot of flack over the past couple weeks and months. A lot of research out there saying that the growth in them could be storing up trouble. What are some of these academics saying?
It's the fear that has always dogged bond ETFs, in fact. Simply put, they're taking not very liquid assets like many bonds are, putting them in a very liquid wrapper, which is what an ETF is, causes a mismatch that can leave investors potentially trapped in any market shock. Now, fresh research from a PhD candidate in the Swiss Finance Institute has taken a look at this. And he wasn't looking for issues so much, but he did find that increased ETF ownership of a bond or passive ownership causes bond liquidity characteristics to be similar. So bonds behave the same way. And the upshot of that is, in a sell-off, in any kind of liquidity shock, more people could potentially be trapped in more assets.
Right. Sam, thank you so much, our very own ETF czar for Bloomberg News. Thanks. And now we're back with Howie Lee from Elgin. Howie, Sam talks about this dual concern of both crowding into bond ETFs and some of the liquidity issues. Are those concerns you also share about these products?
I probably don't share the concerns in the same way. We certainly get questions from investors. A lot of people think, ETFs won't be able to handle bonds. But actually, if you look back to what happened already this year, bond ETFs did exactly what they were supposed to do. They remained liquid, they remained tradable. Now, at that moment in time, around March and April time, spreads did widen. But actually, what people realized during that time was the spreads of the bonds widened just as the underlying bonds themselves widened. So the Bank of International Settlements actually came out and wrote a paper after doing some research to analyze what happened there. And they did highlight the fact that what bond ETFs did do is essentially reflect the pricing and gave it actually almost a leading indicator of bond pricing real time to investors. And so bond ETFs can continue to essentially give exposure to the underlying bonds in a diversified manner through a single trade. Now, that being said, I think it is a responsibility of issuers to make sure whatever they put into a bond ETF indeed remains liquid. So investment design is going to be very important.
But Howie, how attractive or how much does the story of attractiveness for bond ETFs depend on the Fed support?
I mean, the Fed support buying into bonds this year has obviously made a lot of headlines. Now, if you look at the scale of it, it's actually quite small compared to what's actually trading in the exchange. I think up until the end of September, the Fed had only reported to have bought about $9 billion worth of bond ETFs in the U.S. A lot of these were indeed U.S. listed ETFs themselves. So technically, it's not really going to move the market. But what it does do is actually highlight to investors that this is an access route that is easy to invest and liquid and also diversified. So if anything,
we certainly do see more types of investors in bond ETFs. Howie Lee from Legal and General Investment Management stays with us. Now, coming up, fancy taking a gamble on the growth of sports betting and online gaming? Well, there's an ETF for that. Plus, we'll discuss the race for the White House and what it means for investors. That's all next. This is Bloomberg. This is Bloomberg ETF IQ Europe. Everything you need to know about the funds and the flows. I'm Dani Burger. It's less than 2 weeks until the U.S. election, and the country's ETFs have had a strong year so far, taking in more than $460 billion. That's an organic growth rate of 9.4%. But what difference will the outcome of the election make to investors? Bloomberg Intelligence says government policies and regulations may have some influence, but ETF's strong value proposition will remain the key driver of industry expansion. Total assets under management have risen steadily under every presidency dating back to the 1990s. Still with us, Howie Lee from Elgin. Howie, one question I think that's important to pose with any how do you position around election conversation is, does it make sense to do it with ETFs, to use these more broad-based indices when it's really a binary outcome?
Yeah, absolutely. I mean, ETFs themselves are extremely flexible tools, whether they're for tactical positions or long-term strategic ones. So if an investor is looking to essentially play the market and invest using ETFs to see what the outcome of the election will be, there are absolutely building blocks in both equities and fixed income that investors can use.
So if investors are using them to prepare, Howie, how are they using them? What exactly are they buying? And what do you recommend that they buy to prepare?
Yeah, I mean, the thing with recommending funds to buy, in for an election is that we're not going to know the outcome. I almost would encourage investors to think about some of the certainties beyond the election. We know whether it's Trump or whether it's Biden that's going to win that. we're still going to have some issues as it relates to US-China relations, a vaccine coming likely at some point in 2021, but also who's going to take the global tech leadership, again, whether it's the US or whether it's somewhere in China. Those are the kind of issues that I encourage investors to think about, because those are long-term, and we can actually position portfolios to align for growth that way.
Yeah, that tech story, especially with regulation, really interesting one to watch. And we'll get more with Howie Lee shortly. But let's first take a pause and dig into one of the exchange-traded funds you may not have heard of. Here's Sebastian Solik with this week's There's an ETF for That. Hi, Seb.
Hi, Danny. This one goes out to all of those who missed out on those 3 percentage-digit stock surges in the likes of DraftKings and other sports betting companies. Turns out there's an ETF for that. It's called Bets, and it's a passive way to play what is a growing industry. The creator of it says that there may be opportunities in Europe similar to what we saw over in the US. That because lots of them, he says, are very cheaply priced. There are stocks like Kindred, which is over in Malta, which is part of this ETF, 37 in total, by the way, which are not very well known, but are key players within this ecosystem. And so as that ecosystem grows, those fundamental parts of it will grow as well. If we flip it over, I can show you how this ETF has done since it debuted way back on June the 4th. Not bad at all. 36% of gains. You see the white line there. That against the S&P, which was around 10% in the orange line. So outplaying the market. The question is there, would you bet, Danny, on a betting company?
Betting on betting, that's definitely some sort of leveraged gambling bet. Bloomberg Sebastian Solik, thank you. And still with us, we have Howie Lee from Legal in General. Howie, ETFs, like Seb was explaining, and really all these thematic ETFs have had this explosive growth in Europe. Why? What accounts for that? Why is this year the year of thematics in Europe?
I think why it's grown so much is that asset allocation has increasingly looked to thematics to essentially give them that long-term return. If you look at why themes are created in the first place, we are actually trying to put growth into portfolio regardless of the economic cycle, regardless of the elections. This is actually targeting structural shifts in our society. And now sport betting, of course, is something that's becoming a lot more popular as people spend time at home. But there are many other themes like e-commerce or energy storage, which we know that actually as humans and a society, we are changing and we are going towards online commerce and we're going towards a greener energy future.
Howie, if you're going to bet on structural shifts, surely the coronavirus must really be in the fore. Are there any themes that are more attractive to you now with the pandemic?
Yeah, it's a great question. I mean, we get a lot of questions from clients around cybersecurity, robotics and automation and AI, just because with more people spending time at home, they're experiencing these issues. Automation, because it makes things more efficient, cybersecurity, because they're always online. But actually, I think what's been really popular this year is very much around e-commerce. The experience that people have had during lockdown meant that they are ordering things more online and getting them delivered to their doors. And this is really challenging that industry of logistics, of essentially getting stuff to people within the next 24 hours or 48 hours. So there's been a huge amount of growth, and it's beyond companies like Amazon and Ocado. Whilst we track a couple of those, there's a full portfolio of them which are actually showing very promising growth, great sales and volume figures, and that's across the entire ecosystem of e-commerce logistics.
Some of those you mentioned, for example, AI and e-commerce. When you put them into an ETF, how do you make sure that it's a very pure play bet and you're not, say, getting basically the same exposure as you would if you bought a NASDAQ 100 ETF?
Yeah, it's a very important consideration for anyone designing thematic ETFs. For us at Legal in General, our approach is to always work with dedicated experts in those areas to understand how that new kind of ecosystem is working. Because you can't just type in e-commerce and find a whole classification of companies, that way. You actually have to do on-the-ground research to understand those companies and use those data sets from data experts in order to compile a strategy. So for us, it's actually trying to define and classify, what makes up e-commerce. And here we've got fulfillment companies, we've got warehouses, and we've got last mile delivery. We then need to understand what companies are listed which participate in those markets and generate revenues from them. And then we put them all together in a consolidated basket so that your investors, through one investment, can have a diversified exposure to the growth of opportunity around e-commerce logistics. So that is how purity from an investment comes as it relates to thematic investing.
That sounds like a lot of work that goes behind the scenes in compiling that ETF. Are you worried, though, about more or less copycat ETFs? For example, you have the Robo ETF invests in robotics, but shortly after you debuted it, iShares comes out with a similar version. Is this an issue in the industry?
I think you can kind of see it as flattering. You identify a theme as the first to market, and then another one comes into the market slightly different. What we always encourage investors to do is understand how the investment was built. Is it something, like I mentioned before, was it built through a very rigid investment process, which some people call active research and transparent implementation, or was it built by some other means? We always tell investors to essentially lift the lid, take a look at the companies that the ETF actually holds, and make sure that you're getting some pure plays in there. One of the concerns and dangers would be to opening up that lid and realizing that you're over-concentrating into companies that you may already hold in other parts of your portfolio.
So is the play here, you said it's structural shifts. Is there any scope for maybe using market timing with these thematic ETFs?
There certainly is. I mean, we certainly don't design these products to essentially focus on timing because, again, this is about a long-term growth theme. So using e-commerce as an example, we know that the e-commerce logistics market is forecasted to grow on a compound annual growth rate of close to 12% a year. That is really the target that we're going for the next kind of 5 to 10 years. And actually, our job is to make sure that over that period of time, there is some consistent growth. This year, we're obviously seeing much stronger performance in that. And for us, it is just making sure that we continue to pick the companies together with our experts to put it into the portfolio so investors can have exposure to a very diversified way of essentially playing the growth in e-commerce.
Right. Well, diversity, the name of the game, certainly in a volatile year like this. Thank you so much for your time today. Howie Lee, head of ETFs at Legal and General Investment Management. That's it for this week's Bloomberg ETF IQ Europe. We'll be back with more next Wednesday when we're on earlier than usual at 8:30 a.m. London time. This is Bloomberg.